Hello friends, this side Rahul here is the Chief Executive Officer of Treasury Consulting LLP, and today we would be covering a topic which is dark pools. It's a very debatable topic. So today if you take out 100 research reports from Google, and I'm sure that 40 would have started criticizing the dark pools. I'm not saying that the dark pools has not done anything wrong in the last few years. They did. 2010 flash crash was pertaining to dark pool. 2013 flash crash when when Swiss National Bank removed the cap from Euro to CHF, it was created by dark pools. So I'm not here supporting dark pools. I'm not saying that they have done nothing as far as this their trading strategies are concerned, as far as their profit motive is concerned and all. No, it is not like that. They have done tremendously wrong thing. But I would like to talk something different here. What exactly is dark pools and how the trading it is happening? So we are not here checking the authenticity of the dark pool, whether they are very honest people or they are not honest people. But before that, let me tell you a little introduction of the dark pools. Actually, high frequency trading is of two kinds. Like people are saying that the high frequency trading is a subset of algo trading. I appreciate that. But high frequency trading itself is of two kinds. Because take a simple example. If you are a chartered accountant, company secretary, cost accountant, ACFE or CFE, CPA or any other degree holder, you are maintaining a lot of books for your companies, which could be P&L, which could be balance sheet, which could be cash flow. It could be different books. Some people are maintaining the investor relationship and so on and so forth. But let me have a simple question from your side. What exactly are these books? If you are a private limited company, these books you will not declare in the public domain. But if you are a public limited company, you will declare these books in the public domain. This is exactly a very simple, not an exact, but a very simple difference between dark pools and OTC versus ETD market. In an ETD market, everything is crystal clear. You have the brokers, you know the forums who are maintaining the margin, you know that it is a margin call, you know that it is a variation margin, you know that it is a point of default and so on and so forth. But in dark pools, you don't know who is taking the money, who is receiving the money, why he is taking the money, why he is receiving the money. This is always an issue. Dark pools is nothing but a subset of alternate trading systems, ATS. Some people simplistically mention this as ATP, alternate trading platforms. For that, we have a separate regulation in the US market, because US is one of the largest market for hedge funds after Europe. Europe is second number, and so would be the regulation. US would have a dedicated regulation, like they have Dodd-Frank, Volcker and all. This dedicated regulation is alternate trading platform regulation, or regulation for maintaining alternate trading platforms. Now, this is how a dark pool maintains. Dark pool maintains two sets of books. We were going to discuss that after a few minutes. One set of book is known as a lit book, and one set of book is a dark book, and another is a blend book. Now, this is how it would be. You would have these people, those who are generally dealing in the dark pools. Example: pension funds, hedge funds, institutional investors, qualified institutional investors, mutual funds, like Prudential, which is the largest insurance player in UK. You have liquidity providers, insurance companies, private equities, PPP desk, private placement platform, private placement platform desk, FCM, which is future commission merchant, and so on and so forth. Now, that doesn't mean that all the dark pools are wrong. We have the legitimate dark pools also. One of the reasons of the dark pools is that the bid-ask spread is very good. Example: suppose you are doing a trade in an approved exchange, and in this exchange the bid-ask spread would always be less what a dark pool would get for you. So dark pool will give you at least 1 bips or 2 bips here and there, and in a foreign exchange market 1 bips is a big number, my friends. It's not a small number. So not all the dark pools are wrong, but yes, after the flash crash of 2010 and the currency flash crash of 2013, When when Swiss National Bank removed the cap from Euro CHF, we cannot say that not all dark pools are right also. This is how it is. These all people can either they will contact the HFT. They don't have, they sometimes they do have their own HFT, sometimes they contact HFT. HFT is high frequency traders. High frequency traders will determine where exactly they need to place the orders, and of course sometimes client will push them, sometimes they will tell to client. So it is both sides. So one way is order management system, execution management system. These two are the part of feeders. One is multilateral trading platform, organized trading platform, broker crossing network, broker dealer networks, interbank broker dealer networks. These all these two maintained by the iBankers, and ATP, alternative trading platform, shortly known as dark pools. Here we have taken a sample example of the Goldman Sachs. It doesn't mean that the Goldman Sachs is having a dark pool. It's just for the sake of explaining, because they are the largest American bank, only for the sake of example. Assuming Goldman Sachs is having 4,500 clients, and these only, I will again repeat that this is only for the sake of example, that we are not here commenting on any bank. So this Goldman Sachs, assuming have 4,500 clients, and they would surely be having a liquidity flow. Now Goldman Sachs would have BCN, which is broker crossing network. What is a broker crossing network? It is nothing but a subset of OTF, which is organized trading facility, which is one of the regulated platforms which we have as per MiFID II. Like MiFID II would having three regulated platform. One is which is multilateral trading facility, organized trading facility, and RM, which is regulated market. Now one of the facilities which they do have is the BCN, which is broker crossing networks, which I mentioned here. There are actually two kind of BCN. One is a BCN, one is IBBCN, which is interbank broker crossing network. This liquidity flow actually in BCN, in that case, they have one thing which is known as dispersion trading, and this is something which dark pools would always have. Take a simple example. Today you are in Singapore and you wanted to take crude futures. Take Dubai. You are in Dubai and you wanted to take crude futures on DGX, Dubai Stock Exchange. Very easy, not very difficult job. Nobody can stop you by the time you are able to pay the margin, by the time you are able to maintain the variation margin, by the time your margin call is not getting, you're not getting the margin call, nobody will stop you. You are most welcome to go ahead with that. But in a dark pool, if you are going, because there are multiple dark pools, like we have a dark pool without quoting the name, maintained by a European bank. This dark pool do not accept less than 900 million order in euro, which is a big amount, which is approximately if we go today, which is $1.1 billion. Minimum order is that. We have dark pools, those who have taking 30,000 euro orders. We have dark pools, those who are taking more than euro $900 million of orders. All these impacts is the spread which they are giving to you. A dark pool which is taking a 5k versus a dark pool which is taking at least 900k, what impact is the spread? You must be thinking that when you have an investor whereby a dark pool is taking 5k, why he is investing that? Why he is not going in an exchange? The reason is pretty simple. Because in an alternate scenario, we do have multiple investors, and out of these, example, pension fund, hedge fund, institutional investors, qualified institutional investor, mutual fund, liquidity provider, insurance companies, private equities, PPP desk, and FCM desk. Those who do not want a part of their order or a complete order should be in the market. That is why they will go after that. And that is very common. That is very common in our market. Very common in our market. So they have three options: BCN, broker crossing network, interbank broker crossing network, and interbank crossing networks. The name which I mentioned for the sake of example is having capabilities of all three. The largest American bank, exposure in almost wide variety of derivatives, and so on and so forth. They can do anything, whatever they want to do. They just need to think and they would be able to do it. Last but not least, all dark pools will maintain two set of books. One is off the exchange, one is on the exchange. Number of times in the research report you will get to know that dark pools are maintaining only one set of book, which is off exchange. They are shortly known as off exchange light. Off exchange light, LITE. Now what exactly is meant by that is that this lit book which they have, this lit book means an open book. So sitting today, if you go to Euroclear and say that how much amount of netting you are doing, they will tell you that we are doing 25 billion euro of netting. But if you go to a dark pool and say how much amount of netting you are doing, they will never tell you. That is why this is known as dark book. One side they are maintaining the blend book. What is blend book? In a blend book, a part they are keeping as a lit only for the sake of formality. So example, somebody will pushing a order of 1.5 billion euro dollar order. Out of 1.5 billion dollar, just 200 million dollar they will do in the OTC market, and rest 1.3 billion dollar they will do via high frequency trading, and that is nothing but via alternate trading systems or ATP, alternate trading platforms. So henceforth they will maintain a blend book. All these will end up that orders will get executed, but there is no public record, and the issue is the regulatory landscape whereby MiFID is coming, Market in Financial Instrument Directive second. They are pretty clear that pre-trade as well as post-trade transparency has to be there. So high frequency trading is safe in MiFID second, but dark pools might need to amend how they are behaving right now. This might be an issue with the dark pools over a period of time. This is what we wanted to communicate as far as the dark pool is concerned, giving you an example of a bank called Goldman Sachs. We are also very pleased to share that we have acquired the rights of MT5, which is MetaTrader 5, one of the advanced order management systems which we have right now in this world. We already have MT4, MetaTrader 4. We already have other platforms like Reuters and Bloomberg and Excel solvers. In case you do have any training requirements and any kind of consulting requirements, you are most welcome, and not to mention our fixed income platform is on the way. Hopefully tomorrow we will sparing the first look, and by September, by October we would be sharing the complete look. And in case of any doubts, you know my mobile number 9899242978, while my email is rahul.magan@treasuryconsulting.in. We would like to thank you very much and have a wonderful time ahead.